Hey guys, Mark McMahon Real Estate, talking about will the market crash in 2021, 2022. These are my opinions. Take it for what it's worth, but it's what I think, and I'm not afraid to say it. So anyway, if that's interesting, hit the like button, subscribe, sign up for notifications. Ali likes that, and let's dive right in without further ado. Will the market crash in 2021, 2022? I'll start off by saying I don't think so. And I'll follow that up by saying, but I don't know, because nobody does. Guys, one thing you want to be really careful is making big decisions based on people's opinions. And you don't want to base everything that you do on what other people say. Gather the information, make a chart, decide for you what you think, because everybody has an opinion they're pushing for a certain reason. Like right now, I don't really have an agenda with this video, I'm just giving you my opinion. But most people, when they put information out, have some sort of an agenda. They want to sell you something, they want you to buy something, and even if I wanted you to buy something, it would have nothing to do with what I think is going to happen to the market. So, having said that, here we go. All right, I'm going to do this in two parts. We're going to do part number one, it's all going to be in one video, but part number one is going to be reasons I think it won't crash, and part number two is going to be reasons I think it could crash. And then at the end, we'll kind of go over what I think's really going to happen. All right, reasons it won't crash. Low inventory. Right now, everybody's talking about it. We're faced with really low inventory. So since probably 2006 or so, 2007, when housing started to slow down, 2007 mostly, we were building a lot of houses before then. We haven't really built a whole lot of houses since then. You may say, well, Mark, you know, I live in Southern California. I see houses going up all the time out in certain areas. And yeah, that may very well be, but you don't see as many as you saw before. It seems like there's a lot because they put a lot of billboards up, but there's not nearly as many being built, and that's just right here. We're talking about the rest of the United States. Most of the housing developments that are going in right now are very small. They're not the huge ones that we had before the crash of 2007. So, inventory, very low right now, and the amount of houses that are for sale is very low right now. That's mostly because housing prices are going up so fast. People they're smart enough to realize there's really nowhere to go. Yeah, I'm going to sell my house for a really great price, but then I got to go buy another more expensive house. So I'm just trading apples to apples. I'm not able to move up unless I've owned that house for such a long time that I've got a ton of equity. The next house is still going to cost a lot. So it doesn't make a lot of sense for a lot of people to move. So another factor in low inventory is a lot of older people are not selling their houses right now. That remains to be seen as to whether they're going to continue that trend or if they're going to actually start selling again, moving into smaller places, or just selling and hitting the road. Obviously, at this point in time, RV sales are massively high. And let's just see what happens. Let's just see what happens with these older folks that are retiring right now. All right, low interest rates, we all know about that. The cheaper the payment is, the more house you can afford. So low interest rates, I don't see anything going up higher at this point. That could change. Anything can. So, but low interest rates are keeping buyers in the market right now. So if that's the case, if that stays that way, then that's even less chance that the market will crash. There's another reason is a lot of new investors, a lot of new buyers, a lot of new people that are trying to buy a house for the first time, like millennials in the 24 to 39 age range, are really buying a lot of houses. You know, again, this is a few years ago we were talking about how these kids can't get their you-know-what together and they're not going to be buying anything. Well, guess what? In my neighborhood, I'm seeing a lot of strollers and a lot of folks that look like they're in their mid to late 30s. And those are millennials, and they are buying a lot of houses right now. My wife and I actually had a discussion on it yesterday. Strange we're talking about it today. So that's helping the market. Gen Z's coming right behind. And of course, we were worried about those kids too. Guys, we were worried, the baby boomers, I'm a baby boomer, but the older baby boomers were really worried about kids in the 70s like me with holes in their jeans and long hair ever getting their crap together enough to actually even get a job. I've reached some modicum of success in my life, and a lot of us have. So this is something that's going to happen every time. Older people always say, kids ain't going to make it. You know, they haven't got the stuff. but they tend to do it. So that's not an issue anymore at all. Probably never was. Overall, the market is looking really, really good right now. There's a lot of factors that are making it that way. Could it change? Sure, it could. But let's see. All right, so let's go over the reasons that it could crash or it will crash. And these can be far-fetched, but they're very real. It's things that have happened in history that could happen again and affect the market. Interest rates could go up, right? So right now we're seeing, let's say, an average of 3%. They've been as high as 17% in the past. So could that put a damper on the market? Yeah, it could really put a big damper on the market. It could stop it in its tracks. I don't see that happening either. The Feds keep playing like they're going to raise them, then they're not going to raise them, then they're going to raise them. I think it's just to keep us on edge. I don't think they're going to raise them. If they do, it could happen. If they raise them a lot, it will happen. If they raise them a little bit, probably won't affect things too much. But even a 0.5% raise will slow the market. You watch, you wait and see. War. All right, I'm not predicting war, guys. So I'll say it right now, I'll say it again. I am not predicting war. I don't think we're going to break out in war anytime soon, even though we're still in a couple of conflicts right now, unofficially or officially. I don't think that's going to happen, but crazy things have happened in the past, and crazy things will happen in the future. We don't know. That could very, very easily upset the delicate balance of our economy right now. And if it does, guaranteed, people aren't going to be thinking a lot about real estate purchasing right then. I will be, unfortunately. I mean, I'm going to take advantage of whatever situation comes along because I'm an investor. But most people won't. They will stop everything, much like they did as soon as COVID hit. Everybody stopped everything. Could happen with a war. But I don't see a war on the horizon, but who knows? All right. Another issue that is a very real issue, especially here in 2021, is another resurgence of COVID. Now, there's a lot of information out right now, and I'm not going to quote anybody because I looked it up and there's just too much. There's a lot of different people out there that are way smarter than me that are saying that there's going to be various strains that keep coming up over the next couple of generations possibly. Now, I don't know enough about that. I'm not an expert on that. But if that's the case and we have shutdowns like we did before, we may not recover as quickly, if ever. So that could cause something if they can't stay ahead of that. I don't think we'll have as much luck as we did with this one. If you lost a loved one, I don't mean anything by saying it that way. What I mean is we dodged a major bullet. Most of us did, some of us didn't. But we dodged a major bullet by our economy surviving and thriving through this thing. I don't think that's going to happen again. I don't think we get lucky twice in a row. I don't think they can spin their way out of a second one. But question remains as to whether that's going to happen or not, whether they can stay ahead of it. So that could be one of the things that does it. Another one would be other countries having issues. You know, we've got a lot of allies out there that count on us and we count on them. Mostly they count on us, but that could be another issue. Alliances with other countries could cause issues for us and affect our economy. Guys, there are so many factors that enter into this. People didn't even get into money printing and all the other stuff that could happen. What you came here for is to get my opinion on what's going to happen. I just wanted to give you the facts for yes and maybe no. My opinion is if things continue to go the way they are and don't change, I believe we've probably got another 1.5 to 2 years of housing gains. Now, I do believe it's going to slow down. I don't think we can obviously keep going at this pace. I think demand will slow down a little bit. I do not think housing starts will catch up anytime soon. I think people are going to be really careful with that. So even though demand may diminish slightly, I believe there will be enough demand to move the market and keep it going up at a modest rate. I can't see the rates going up like they have been, where we've seen 15, 20% in a year in some markets. That's not sustainable. However, I do see the market continuing to be strong. I see a lot of people making money. I do, unfortunately, see a larger divide in classes, though. Lower class will get lower, higher class will get higher. People that make a lot of money will continue to make a lot of money. People that aren't making a lot of money will probably go the opposite direction. So, having said everything I've said, if you're going to get involved in some sort of investing, whether it's the stock market or cryptocurrency or real estate, which is what I do, guys, do it carefully, but do it. You need to start now. All right? Guys, I hope you enjoyed the video. Thank you so much for tuning in. If you liked it, hit the like button, hit it twice. Sign up for notifications and subscribe to our channel. I appreciate it. And if you haven't downloaded our list on how to get started in real estate investing down below, but sign up for it. It'll walk you through how to get started, even if you can't get started right now financially. It will get you started. All right, Allie's also going to put a couple of other videos over here that have something to do with what we just talked about. I sure wish I knew what they were, though. But she'll put something over there that's really good. I guess I would hope that you guys would watch those. Thanks a bunch, and I'll see you next time. Hey guys, check out these 2 videos. They're really going to help you on your investment journey. I'm also on Instagram. Tons of great video content there. Really good stuff. Please subscribe. I'll see you next time.